Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. During this presentation, we welcome GSE Systems, ticker symbol of GVP, that is Golf Victor Peter on the NASDAQ Stock Exchange, and its President and Chief Executive Officer, Kyle Loudermilk, and Chief Financial Officer, Emmett Pepe. Before we begin with those not familiar, Lytham Partners is one of the country's leading investor relations firms. With more than 2 decades of corporate access experience, we've built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors, while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we can bring value to multiple constituents. We will dive into the discussion in a moment. One final item before we begin. I want to remind everyone that GSE is available for one-on-one meetings later this week. If you have not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click on the one-on-one meeting request button. With that said, let's begin. Kyle, it's all yours.
All right. Thanks very much, Adam. Thanks, everybody. I am going to start sharing my screen, and Emmett and I are going to walk you all through our investor deck. Okay, so with that said, GSE Solutions, allow you all to read this for yourselves on your own time. But who are we? What is GSE? We feel we're the future of power operations. Our mission is to deliver advanced engineering services, products, and a flexible workforce solutions that support a stable grid, clean energy production, and the decarbonization of the power industry, things that are very top of mind for the world today and for society. A little bit about our company at a glance. We've been in business for over 5 decades. We have hundreds of customers across 50 countries. We're a global business. We deliver unique and essential engineering and workforce solutions, services, and products. Those products and solutions include performance optimization, regulatory compliance, simulation, training, and staffing. We are one of the few publicly held independent companies that serve the clean energy sector of nuclear power and natural adjacencies. We support the future of clean energy production and the decarbonization of the power industry. Excuse me, in the right-hand column here, you'll see a bunch of the telemetry of our business. We're based in Maryland. We've always been based in Maryland, over 300 employees, and you can see the other aspects of our stock price and performance. Our leadership team. I'm Kyle Loudermilk. I'm the CEO. I have a background in technology and engineering, and have spent my career really working in the technology sector, growing companies, selling companies, buying companies, and I've been here for now almost 7 years. I'm joined by Emmett Pepe, our Chief Financial Officer. Emmett, why don't you give a few words about yourself?
Yeah, thanks, Kyle. As Kyle said, Emmett Pepe, I'm a CPA. Got many years of experience. I spent a good portion of my career in the telecom industry and the second half in the software industry. Kyle and I crossed paths at MicroStrategy, and as he was building out his GSE team, 6 years ago, it brought me on board as CFO. It's been good working with Kyle the last 6 years.
All right, thank you, Emmett. We also have Bahram Maysami. This is my third tour of duty with Bahram. Bahram is our Chief Technology Officer. He and I first began working with each other over 20 years ago at Aspen Technology. I brought him into Datatel to help build the new solutions that help grow our company, and we had a terrific exit. We always like to say we quadrupled valuation, doubled revenue, and tripled EBITDA in 3 years, and had $1 billion exit. And Bahram really has a tremendous background in engineering, technology, and thought leadership. He's doing a wonderful job. He's been with us also over 6 years. Don Horn heads up our engineering services group. Don has been working in the nuclear power industry. We were fortunate enough to meet Don and acquire Don's business, True North Consulting, and all of our engineering groups work under Don. He's everybody who is anybody in the industry knows Don, and he's an absolute great leader, good mentor, and pleasure to work with. And our newest member of the leadership team is Brian Green. Brian heads up our Workforce Solutions group. He's done an amazing job over the past year that he's been here and turning that business around and growing it substantially. His background is running and working in professional environments for Workforce Solutions. And we're very fortunate to have Brian, and he's doing a great job. So what do we offer? We really operate as two business segments, the engineering business segment and the Workforce Solutions segment. Engineering comprised of a highly experienced team focused on creating innovative ways to meet our customers' need using a combination of our services and our technology. So we're a tech-enabled engineering group, and we create new products from this group. Our services span engineering, design, and implementation. Our simulators enhance design and performance, and we help our customers optimize their plant performance and engineering through program applications. For Workforce Solutions, it's a very unique business. It's all about scale. And this division makes sure that the right people and skills are in place at customer sites so that their operations run smoothly. Our experts help identify solutions and talent to address any workforce gaps in our customer base. So we offer flexible staffing services, predominantly white collar, and workforce management programs, knowledge transfer support. As an aging workforce begins to retire, our staff can help address that knowledge gap. And we have very specialized nuclear training programs that we offer to industry that have proven highly successful. Emmett, why don't you take it from here?
Yep, thanks, Kyle. What you see on screen here is our business model. Just kind of want to walk through. Let's start with the far right, Workforce Solution. That model is clear, is a time and material. Right now, it's about 50% of our business. Margin typically are 12 to 15%. But as you'll note, as on our call yesterday, Q4 was over 16%. So it's technical high value staffing, and the services, as services performed, we build. Engineering is the other segment. Embedded in engineering is software, but we'll talk about that separately from a margin perspective. Higher margin business, 30 to 40%. Engineering modeling and modification services. Many fixed price. There's a little bit of time and materials. A lot of the revenue recognition is on the percent complete, and that'll cause some lumpiness in rev rec. Where you might have big orders, it just might be in backlog, and then the revenue will come over time. On the software side, this is something that we'll dig in a little bit deeper later. High margin business. We've had good growth. We do have perpetual license and recurring maintenance, but our focus has been on the SaaS, and we build that subscription basis, and we recognize it ratably over the time period. Okay. I will note too as well, SaaS typically is about 5%. Strong Q4, it's a lot higher than that exiting the year. So what's our portfolio? What do these segments really cover? This is a good detailed slide, right? Engineering services, plant modifications, thermal performance, decommissioning. A lot of that is in the engineering side. On the Workforce Solutions, consulting, staffing, training. We cover a broad range, everything focused on the nuclear power industry and delivering their needs. Okay. Customers. You can see blue chip customers. We've been working with these customers, on and off for 50 years, right? In many cases. I think important to note here is our relationships. We have good relationships with these customers. A lot of them are longstanding, not only with the big utilities, but Department of Defense, Department of Energy. And this positions us, because of our relationships, that there's going to be a lot of innovation that's happening in the industry. And as these customers, they're going to lead that innovation. We're going to be a good partner for them in that innovation. All right, Kyle. I'll send it back to you there.
Yeah, I'll talk a little bit about the market overview. What are we seeing today? So what we're seeing at a very high level, and it's really becoming quite tangible, is the drive for environmental equity and clean energy availability. So the U.S. is charged to create a carbon-free power sector by 2035. That's effectively decarbonize the grid. The U.S. is on a path to a net zero economy by 2050. Current administration has reestablished the President's Council of Advisors in Science and Technology. There's specific goals of creation of jobs and skilled trades to accelerate the transition to clean energy and energy transmission projects. There's specific plans to increase the resilience of facilities and operations. The American Jobs Bill goes a long way towards that. I can talk about that in a moment. There's likely a phase out and elimination of fossil fuel subsidies. If not today, certainly over time, we're going to see this happen. The US 1.2 trillion infrastructure bill was passed in 2021, demonstrating one of the US's largest commitments to decarbonization and creating specific opportunities for nuclear in the current energy transition. In our recent earnings call, we gave a lot of the details of what this means, but several $billions have been made available to focus on extending the lifetime of existing operation of nuclear plants in the United States and the importance of doing so. So in 2021, the US infrastructure bill was passed. In 2025, we have to embrace new technologies like SMRs. We're going to see those come online. I'll talk about SMRs in a moment. The goal is by 2035 is to have a carbon-free grid. And by 2050, to have the US at a point we are a net zero carbon economy. So a lot is happening today. And certainly global issues such as the war in Ukraine highlight the need for energy security and nuclear's role in that. So effectively, the future of nuclear is here, and it's here today. The US leads the way. The US makes up over 30% of the world's nuclear energy powerhouses. GSE experts have experience working with these utilities and several more around the world. We have a deep understanding of regulations and emerging approaches. And this shows on the right-hand side, nuclear power generation by country and the necessity for that. Countries like France, for instance, generate a tremendous amount of nuclear power as a percentage of their power grid. Likewise, Finland with the newest nuclear reactor that's come online, and others. Nuclear plants are here for the long term. An average nuclear plant spans typically a 60-year lifetime, and our existing fleet is undergoing extensions of 20 to 40-year, and now we're seeing 80-year license extension, operating lifetime extensions. There's already discussion for certain plants to go to 100 years. Now, what does that mean? Our technologies and services support this aging nuclear fleet. As the fleet ages, it continuously invests in itself to upgrade its pumps, its heat exchangers, its piping, its reactors, of course, its fuel. So these are not assets that are allowed to go fallow. They're consistently reinvested in. And in so doing, they extend the lifetime of these plants and they create more power from the existing asset base by, again, investing in new equipment, new capabilities in these nuclear power plants that can produce more power over time. And the US leads the way for this in the world. Nuclear is important for reducing CO2 emissions. 52% of our carbon-free electricity comes from nuclear power today. GSE's mission, innovative technology, and partnerships support this goal. And the graph on the right-hand side shows just how much emissions are avoided through the use of nuclear power. So the new infrastructure bill that I mentioned, also known as the American Jobs Act, and the infrastructure bill was signed into law. It provides specific financial support for keeping existing nuclear power plants facing economic hardships operating. It helps level the field at a federal level with wind and solar, which receive very heavy federal subsidies. And there's funding from the Department of Energy as well for advanced reactor demonstration program. This is what's going to come after the next generation of nuclear power plants. And we want to be ahead of that and lead the world. And so there's specific funding to accelerate that effort. So the top initiatives where funding will support nuclear energy, $6 billion will go towards a nuclear credit program designed to preserve the existing nuclear power fleet and prevent premature shutdowns. The existing nuclear power fleet not only has to run and keep running if we have a chance of meeting our carbon emission goals, but we have to extend the lifetime of those plants and we have to invest in them to produce more power from those plants. And that's occurring today. So this is great news. It's preserving immense amounts of carbon-free electricity, as well as high-paying jobs in typically rural America, and the importance of that. These are highly skilled jobs. They're very specialized. It takes a long time to train somebody to effectively work within a nuclear power plant, and we need to keep that job force robust and evergreen. There is authorizing and appropriating the funds through 2026. That's $1.2 billion a year to the DOE to implement the Advanced Reactor Demonstration Program. Funding approvals for DOE's ARDP demonstration projects authorizes $3.2 billion through fiscal year 2027, and another $2.4 billion from 2022 through 2025 that can be used for risk reduction and advanced reactor concept projects as well. So a lot of momentum, a lot of money flowing to support nuclear both today, as well as prepare us for the future. Emmett, do you want to take it from here?
Oh, yeah, I can, absolutely. So what's our GSE's multi-year roadmap for growth? As you can see on the slide, we've got one, let's deepen our organic growth, right? Cross-selling efforts, partnerships, improve the power generation assets, expand into adjacent markets, and build and expand the talent network. Technology, I think this is key. Where we can help the plants optimize, develop innovative software and technologies where we modernize their systems, expand services to the aging nuclear fleet that, as Kyle just talked about, particularly with the extended lives, and expand our capabilities through value. And then new approaches, right? Integration. Can expand those partnerships, the SMR, our partnership with NuScale, and aggressively look to work with other services, natural gas, renewables, solar, hydro. Good, Kyle. So software, I think, we've talked a lot about this on the call. This has been a focus of ours to grow the software stream. Our total software growth year over year was about 23%, from 3.9 to 4.8. However, there's a bit of a shift that we're making. We've been really focused on the SaaS and recurring revenue. So of that 4.8, the SaaS and recurring revenue was 4.4 million. And that growth in that area is 80% year over year. That's that revenue stream. It's effectively a recurring revenue stream, annuity, much better than the old perpetual model. We still have perpetual, and we still have licenses and maintenance on that. But the focus on SaaS has really been big for us, and that growth is tremendous. Kyle, is there anything you want to add on the software slide?
Yeah, thanks, Emmett. I think you said it. This has been a key element of our thesis coming into the company. Historically, when we came in, the company would give away its technology in order to win engineering services projects. And coming from our technology licensing backgrounds, we recognize that as an opportunity for improvement. And so we set out and started from scratch, licensing our technology, packaging it in a SaaS format. And you can see the results. It took us a couple of years to get going, and we're already at a $5 million run rate, 4.4 million of which is SaaS, which means it's recurring, it's highly sticky. We're growth. That growth has come through obviously renewing what we have, as well as introducing new product, and with the annual ratchets associated with our annual maintenance and annual increases with this. So this has come a long way, and it really demonstrates, I think, what we can achieve moving forward with this very high margin capability. So yeah, thanks, Emmett.
I think real quick here, what's in our software? What are the components, right? So we have our simulation modeling, right? That's what we would deliver with our simulators. Web-based training, our Envision on Demand, that's been tremendous growth for us. And probably the future, the thermal system monitoring and other engineering program software, all of those are really feeding into our software growth. Kyle, you want to take this?
Yeah, maybe I can take this. Yeah, so small modular reactors, what are they? Well, they're really the happening real time They're going to be the next generation of reactor technology that's going to be built and commercialized and connected to the grid, both in the United States and the Western world, as well as China. So what do we see? SMRs are advanced reactors that produce about 300 megawatts or less of electricity. What they are is they're built in the factory, so they're highly repeatable, they're high quality, they're built in the factory, delivered to the site on rail car, and erected into the site that has been prepared before the reactor is delivered. So they're modular, they're small, they have a lower capital investment, upfront capital investment requirement. So, you know, these obviate the need for investing $20 billion to build a current traditional nuclear power plant. You can start small and scale into it over time. You have flexibility, siting flexibility. You don't need the big footprint that you traditionally do for legacy nuclear power plants. These can be put on site, typically in a much smaller footprint, and there's plans to build a number of these small modular reactor plants on the site of existing shuttered coal plants. Why is that important? Well, you already have a brownfield site. You already have grid and electrical hookups to that site typically. And you usually have a ready-made workforce in the area that with training, retraining can be deployed into these plants. It's 100% domestic, secure. It's manufacturing and job growth, economic development is highlighted as a result. Most importantly, there's safe, clean, affordable nuclear power. These plants are walk-away safe, meaning if there's a loss of cooling water, loss of power to the plant itself, there's no fear of melted fuel. These will self-cool. An operator literally can get up and walk away, and the plants will be inherently safe. That's huge as well. So that removes the big, boogeyman of risk component to nuclear power. So there are a number of vendors that are developing SMRs. NuScale is the leader. NuScale is going public shortly. We highlighted we have many GSE alumni who work at NuScale and an alumni who's heading up the SPAC that's taking NuScale public. We certainly would ask people to read NuScale's investor site. They have a lot of data on SMRs. GE Hitachi as well is building out their own boiling water reactor SMR, Rolls-Royce out of the UK, and others. Every SNR will need a control room simulator and software upgrades. NuScale's been a customer of ours for over 10 years. They've used our software and technology as a design basis, helping their design basis for their reactor to get the design approval by NRC in record time. And we're very proud of our relationship with them. And you can see on the right-hand column all that's occurring and how rapidly it's occurring to not only advance the development of SMRs, but advance their deployment into the field. And so a number of states, big coal states, such as, Rep. Mike Simpson's state, I believe is Idaho, where the Snake River dams is proposing replacing those with SMR plants. In Montana, where there's large coal-fired boilers that have been shut down at a coal-fired plant. They're funding a feasibility study to build a NuScale plant on that site. Likewise, in Wyoming, TerraPower as well is doing something very similar. So this is a very exciting time. It's actually happening in real time. These aren't futures; they're happening today, and it's great to see. So partnering for success, this is our relationship with NuScale. They're very public about it, as are we. You see our technology and software in the upper right-hand side here. That's an actual control room at the NuScale facility in Corvallis. So with every new plant, we're going to be working with NuScale, licensing our technology. And the closer plants come to being built, there's more opportunity for the broader services of GSE to be brought to bear to help build those plants, engineering, design, workforce development, workforce solutions, for instance. Emmett, financials, we're running out of time.
Yeah, I can real high level here. High level, our segments as discussed, about 50-50 between engineering, workforce solutions. We focus on nuclear power. Most of our revenue is US. We do a decent amount of work internationally. At year end, it's about 14%, but given in certain projects, that could be as high as 20-25%. And then our customers and users are the utilities plus government, DOE, DOD, et cetera. On the orders, I mean, look, we're coming out of COVID, so 21 over 20 is definitely good growth. We're not where we want to be. We want to get back to those pre-COVID levels. Performance had its best order year, and even before COVID. Workforce Solutions, as you can see in the lower left, is bouncing back nicely from the COVID year. And then I think the issue is revenue's trailing a little bit. That's the one area that you can't replace. Orders will drive revenue, and most of our orders in 21 were the second half of the year. I think this just kind of shows it on a quarterly. I think the graphs sort of speak for themselves, as you can sort of see some level of stair steps going up, Q2, 3, 4, really across all the segments. And as mentioned, sort of the revenue kind of reaching a little bit of a flat line, but orders will drive future revenue. Some quick highlights on recent results. The first half of the year, our second half of the year was our strongest. Revenue-wise, Q3 was the strongest since before the pandemic. Improvements in Workforce Solutions, the customers are returning to on-site work. And as I mentioned on the previous slide, the improved order flow in the second half of the year bodes well for us going into 22. One other thing on software, as Kyle mentioned, we mentioned 4.8 million in 21, 4.4 SaaS. To note, over the last 2 years, we went from 2.9 million in 19 to the 4.8. So that's 66% growth over that 2-year period. And then we continue to focus on OpEx, right? We lower them where we can, hold the line where we can, and that, I think we're positioned for future growth there. Next slide. Improved balance sheet, right? PPP loan was forgiven. During 21, we lowered our line of credit by 1.2 down to 1.8. Subsequent to year end, we signed the convertible debt deal. That's got rid of the line of credit, removed some restrictive covenants, and given us some flexibility going into this year. And we still have retention credits coming. Right? We collected in Q1 1.1 million, so that would not be reflected in our 12/31 balance sheet. And we still have a receivable about 3 million to go to be collected. And Kyle? Real quick on this slide, we put it together. We're a unique company in what we do, but we got some peers here that are either in the space, nuclear, engineering services, or staff aug. I think it gives you a good flavor for how our discount to our peer group from a valuation perspective is. All right, and then just in quick summary, our focus, right? Let's capitalize on the demand for these upgrades and extended facilities. We've strengthened our leadership, unifying our engineering services under Don Horn, streamline operations, controlled costs, and obviously focused on cash flow and maximizing that. And we're just very disciplined in how we're running the business from a balance sheet perspective. Next one. Investment highlights, right? This is sort of a summary of what we've talked about. 50 years experience, specialized engineering. We have the talent base, key employees, favorable industry drivers, nuclear, augmenting as base load for green energy, solid growth. The leadership team is focused and very tenured, and we're aligned with shareholders, and we're sizable shareholders as well, management team. Blue chip client base that's going to be innovating in the future, and we're going to be partnering with them. And then just the attractive valuation that we've highlighted, particularly if you just look at our software itself alone, would give a high valuation. I don't know if any closing remark on your side.
No, I have nothing more to say than, look, we've brought the company a long way. Really proud of the people in our company for working through this pandemic and keeping things going, and we're clearly emerging out of it. Like Emmett said, if our you look at licensed companies and their relative valuation, typically 15 times revenue is the norm, and we're generating now $5 million in license revenue. So at some point, we hope that folks note just how very special the revenue components of this company are. And we're confident they will, and the valuation will take care of itself.
Great, guys. I appreciate that. Maybe we got time for a couple questions here, but Kyle, on that note there, maybe clarify a little bit for the audience regarding the software sales. And there's some significant growth there, but specifically what I'm trying to have you explain a little bit more is on the conversion over from being a perpetual license into SaaS. So that should be a little bit more sticky, more recurring, and predictable.
Yeah, so let's talk first, what's a perpetual license? A license that's perpetual is you pay for it one time and you have it, and you pay annual maintenance, maybe. And so, so it's great for a one-time sale, but you have to keep selling to other customers and fight to get that annual maintenance so that the customer can get upgrades. What the SaaS model does is the following: lowers the cost of ownership upfront for the customer. They subscribe to it. It's mostly available through the cloud. So all you need is internet connectivity and a web browser. You don't need your IT department to manage an install of a complex software solution system. And you pay annually every year your subscription, just like a magazine. And that's great for the customer. It lowers their IT and total cost of ownership and their IT demands. They can leverage security of the cloud, which 99.999% of the time, Amazon Web Services is a highly more secure environment than what clients have at their own sites, and for obvious reasons. So there's just a ton of good about it. From a business model perspective, what's great about it is it allows us to have steady revenue stream at high margin. And if a client opts not to renew that subscription, they no longer have access to the solution. And so it's really a very sticky model for the customer and for us. So when we say we've converted to 80% SaaS, and our SaaS revenue and recurring revenues at 4.4 million of a total of $5 million, that's pretty damn impressive. And I'm really, really thrilled about that for the company. And we're excited where this is headed.
Well, one more question. That's great. Let's maybe discuss just a little bit about the bridge from now till SMRs are commissioned. I think give investors a little bit that in the near term there's still a lot of growth opportunities for the company, especially in the existing fleet of nuclear facilities, and that's going to give the company a lot of work to do, upgrades, maintenance that's necessary to keep those facilities or the fleet going. But then also, as we get closer to SMRs commissioning, a lot of work before those are put into the ground need to be done, training and everything like that.
Yeah, look, it's very clear, both stated public policy as well as funding, as well as what we're seeing in industry and utilities is a very sharp focus on nuclear. So major utilities are spinning out into new entities their nuclear assets as unique standalone assets to drive for those credits, to invest in themselves over time and have clear focus to produce more power. Entergy creating Constellation as a spinoff, which is comprised of 98% nuclear power generation. It's all clean energy. Energy Harbor out of Ohio, same thing. So this is not just theoretical. This is a macro trend that's playing out, and they're doing that so they can invest in themselves and do really, really well. And so, we're starting to see our recovery as a result. And as we move forward in these plants with the focus, that it's only going to accelerate our recovery.
Great. Thank you, Kyle and Emmett, for your time today. Thank you for doing this. We appreciate it. To anyone out there that has not already signed up for a one-on-one with GSE, again, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click the one-on-one meeting request button. Thanks again, and we hope everyone has a great conference.
Thanks, everybody.
Thanks, everyone. Take care.